In this video, we discuss about what is KYC. Know your customer checks that require financial and service providers to identify and verify their customers. This is done as part of their anti-money laundering, combating and financing and terrorism compliance effort to combat financial crime and ensure customer due diligence. KYC proactively combats criminal activity by collecting and verifying customer information. These checks improve trust in the industry and help financial service providers manage their risks. KYC has become commonplace with cryptocurrency exchanges. However, some critics say that it takes away the anonymity and decentralization aspects crypto infamous for introduction. KYC is a common regulatory requirement that financial service providers are obliged to fulfill. These checks primarily combat the funding and laundering of money from illicit activities. KYC is a key measure in anti-money laundering regulation, making it an important safety guard for cryptocurrencies, especially financial institutions and service providers like Binance are increasingly having implement robust KYC procedures to safeguard customers and their assets. What is KYC? If you have opened an account with the cryptocurrency exchanges, it's likely you will have had to complete KYC check. KYC requires financial service providers to collect information verifying their customers' identities. This could be through official identification or bank statements. For example, like AML regulations, KYC policies help combat money laundering, terrorism financing, fraud, and the illicit transfer of funds. KYC is a proactive approach rather than reactive. Most financial service provider takes a customer's details in the onboarding process before they can make financial transaction. In some cases, accounts can made without KYC but are limited in their function. Binance, for example, allow users to open an account but restrict trading until KYC is completed. When completing KYC, you may be asked to provide your government ID, driving license, passport. Apart from verifying customer identity, it's also important to confirm their location and address. Your identity documents will provide basic information like your name and date of birth, but more is needed to establish your tax residence. For example, you will likely need to complete more than one stage of KYC. Financial service providers often need to re-verify identity of their customers at regular intervals to do. Who regulates KYC compliance? KYC regulations differ by country, but there is international cooperation on the basic information needed. In the US, the Bank Secrecy Act and 2001 Patriot Act established most of the AML and KYC process seen today. The EU and Asia Pacific countries have developed their own regulations, but there is a lot of overlap with the US. The EU anti-money laundering directly and regulations provide the main framework of EU countries. At a global level, the Financial Action Task Force coordinates multinational cooperation on the regulatory conditions. Why do we need KYC in crypto? Due to cryptocurrencies' pseudonymous nature is often used for the laundering of illicit funds and tax evasion. Improving the regulation of cryptocurrency better its reputation and make sure that taxes are paid where they are due. There are three key reasons why KC checks are needed in the cryptocurrency industry. Blockchain transactions are irreversible. There is no admin to help if you make a mistake, meaning that funds can be stolen or moved and cannot be retrieved. Cryptocurrency is fairly anonymous. You don't need to submit and personal details to open a crypto wallet. Number three, regulation is still uncertain when it comes to taxes and legality of crypto in many countries. Although KYC increases time needed to set up an account, it has clear benefits. The average customers won't necessarily be able to see them, but KYC has a significant impact on keeping your funds safe and combating crime. What are the benefits of KYC? The benefits of KYC are not all obvious. However, it does much more than just combat fraud and can improve the financial system as a whole. Number one, lenders can make more easily assess their risk by establishing a customer's identity and financial history. This process leads to more responsible lending and risk management. Number two, it combats identity theft and other types of financial frauds. Number three, it reduces the risk of money laundering from occurring in first place as a proactive measures. Number four, it improves trust. It improves the trust, security, and accountability of financial service providers. The reputation has a knock-on effect on the financial industry as a whole. Can account encourage investment, KYC, and decentralization. KYC and decentralization. Cryptocurrencies have from their beginning focused on decentralization and freedom from intermediaries. As mentioned, anyone can make a wallet and hold crypto without needing to provide details about themselves. However, of these exact reasons, crypto has become a popular method for laundering money.